show up and make them stop. Wanna know my name so badly, close it, I'ma change the game.
Hi everyone, welcome back to Chillcast, formerly known as Anna and Yaoyao's Talk. Today I have the pleasure to have Moty join us. So Moty is the founder of a new project on Solana called DeFiTuna that's been garnering a lot of attention lately due to its levered swapping and levered and high APY on the liquidity provision side that caught a lot of people's attention. So I came across it through a friend that showed me. I was intrigued and reached out to Moty. So thank you, Moty, for joining us.
Thank you for the invitation.
Let's first talk a little bit more about what prompted you to start DeFiTuna. From our earlier conversation, it sounds like you've been in the Solana ecosystem for a while and you're super familiar with what's already out there in the DeFi space. Where did it inspire you and how did you come up with this idea?
Sure. I still remember in 2020 there used to be on the Solana website a big button that you press and it checks for transaction speed, and that's pretty much the interaction that you had for Solana. You know, you sort of get this clicker, you press it and it shows how fast an transaction is. But early on we read the white paper. Myself and my brother were fascinated by it. I was already kind of a veteran in the space, crypto space, and it just made sense. So my brother made the transition. He's been a programmer all his life, and we sort of started dabbling with the primitives. And then sort of the first version, automated market maker, came out, the second version came out, and we were going crazy. We thought it was really nuts, but all of the problems were there. You know, it never went away. The permanent loss, some of the other issues, and we sort of thought it was really cool, but there's just too many problems with it. And then when we saw version 3 come out, that's when we really got excited. So we come from a place where we were users, hardcore users, and actually the idea of it was co-founder Vlad. He is a professional liquidity provider on chain. Yeah, so myself and Vlad, we founded this company, DeFiTuna.
And what was your background before on Solana?
Full-time trader. I've been trading since 2017, strictly crypto. Just
nice.
I mean, it's just too sweet. Nothing beats the crypto gains.
The other day I was talking to another now full-time trader and he said edge is plentiful on chain compared to traditional markets. For the level of sophistication that's required, there's still a lot of opportunities for individual and independent teams to make consistent profit.
It was a funny time. I mean, during 2017, I mean, it was so stupid, the rewards, that I kind of felt like, you know, I sort of didn't deserve it. And then I went to the traditional space and I started trading there, and the gains were not even close. So I said, I'll go back to crypto, and I just stuck with crypto throughout. It just didn't make any sense.
Totally. I mean, the number of people like in traditional trading that I try to convince to come into crypto is because I'm in Chicago. So when we try to hire people or talk to other industry TradFi traders, the like preconception that crypto is scary or unprofitable deters enough people away so that the rest of the people who are here kind of stick to, like, we create our own little ecosystem. How would you explain DeFiTuna to somebody who is not familiar and has not done a lot of leverage trading?
The way I put it is we cater to two different sides. We cater to those who are very, very simple. They're just looking for APY that's safe. And we cater to the other side where people just look for leverage as liquidity providers. Very simple. You got the simple people that just want to hold something they like, and then you have the other guys who just want to ramp up what they're good at. I can maybe dive into a little bit of details. We sort of pride ourselves in the fact that we would like to believe that we want to be the absolute best place to go and farm liquidity. So we want to support Radium, Orca, Meteora. That's where we want to be. And you know, it's very attractive for the lenders. Our target APY is 45%. So much higher than anywhere you will find, for the simple reason that fundamentally right now there's so much on-chain volume that people who farm liquidity, for them to give away, you know, imagine you amplify 3 times your yield for farming, and then you give away 10% of what you've amplified, it just makes total sense. 10 to 5%, maybe even lower if it's target APY.
When you say that you compose on top, because I think when I looked at your platform, there were like trade, pools, yield, three pages. In the pools front, it didn't look like you were using Orca Iridium, but maybe I'm mistaken there.
You're right, it didn't look like it, but these are all Orca pools, and this is, I guess, our mistake. We will improve it.
Maybe one day you can hook up to Piranha as well for stable subs.
Why not?
So one more pointed question for those who are familiar with levered liquidity provision. How is this different from, let's say, Camino? And are there any similar projects out there beyond Solana space, like let's say in EVM or any other ecosystems?
It's drastically different from Camino and from Margin 5 for the simple reason that it's just, Camino, you just lend it and other people just borrow it.
Camino has the liquidity function.
The issue is the guys who borrow. So why is it that we can pay such APY? A very simple reason. The flexibility of the borrower is on a different level, several levels. You go to Camino and you borrow. You can only set sort of how much you borrow and what you borrow. That's it. So that's all. That ends there. Or you can put it in a vault that's automated, and that's all great. There's nothing bad about that. But it limits the APY. So it limits two things. It limits the guy who's borrowing, and it limits his strategy that he can employ using those funds. And that's really where it stops. And to bridge that over, you need to give as much flexibility to the borrower as possible. Just for an example, let's take a look at Orca or Radium. You might be familiar with how you provide liquidity. Say, for example, we have Solana USDC, and we start farming Solana USDC. Meteora, Radium, Orca, doesn't matter which platform you use. Price falls down, you lose dollar value. You are inherently forced to use to hedge yourself to use the futures. So you actually, as a professional liquidity provider, or just even as a normie, there's no way you can actually stop yourself from losing value when price falls down. So you go to futures and you short at the same time and you capture the difference. Other people just suck up the loss and are willing to farm until it goes back to the same price. We're very, very different. Actually, leverage sounds kind of scary, but for concentrated liquidity pools, leverage is safer. With leverage is safer than farming without leverage. I'll give you an example. I can go pseudo delta neutral. What that means is I might have Solana and I might borrow Solana. So let's take this concept. Whatever you borrow that you short, right? So if I borrow from you an iPhone, it's $1,000. It converted to dollars. In the future, that iPhone costs $600. I buy it back, I keep the difference, right? So same strategy here. I might borrow Solana. Now I'm delta neutral, so sort of pseudo delta neutral, provided I did everything right within the range. And so I set my range, price falls down, I actually capture fees and make the difference. But more so than that, you can actually also go and have directional bias, so you don't have to be neutral. You can ramp up the risk. But generally, with leverage, it's safer to farm liquidity with us. And that sort of breaks the concept of leverage and breaks the concept of people are scared to hear this. But in this exact case, it's just safer.
But you still have to set your own range when I looked at the platform, so you can choose which range you provide liquidity. And let's say you're using same collateral, just essentially looping up. So like you said, if your basis is SOL, you borrow SOL, you get the pseudo delta neutral, and you set a range. But if you set a range super narrow, then once the price moves, you would have to adjust the range. Otherwise, you no longer earn the fees.
That's a wonderful thing about our platform. This flexibility is exactly why people are willing to pay that APY. You know what you're doing, you're going to be much better, because simply put, the cost, if you go to our platform, it's very easy to see that we average around 50 to 80% APY, much higher than average. You go in any time of the day, more or less that's what you're going to see. And it also depends on volatility. Like, do people think that price is going to go down, so they're going to be borrowing more Solana? People think that price is going to go up, you're going to see that more APY goes towards, but it never really goes lower than 30%. And simple reason is that people can employ whatever strategy they want, right? Some people go narrow and they are really successful. Other people go wider. I mean, I've seen some ridiculous stuff done on our platform, and it's just so fascinating. We're 15 days in, 15 days old as a protocol, and even I'm learning new things. I mean, it's just fascinating to do it all together, and sort of, we still keep learning. But what is certain is currently with the on-chain volume right now, makes total sense to take anywhere and any leverage and pay that 40 to 50 to 60 to even 90 APY % to the lenders.
Makes sense. It's interesting because previously double-digit so-called risk-free premium or low-risk premium generally came from perpetuals, and in many cases the JLP, HLP, FLP, those types of so-called basket LP tokens are the ones that are earning a lot of yield. And now you guys are creating this type of yield from liquidity provision for spot, which I don't think I've seen before, at least on Solana. So that's super interesting.
I think the good thing is provided that we're right, and provided that all of it is a good idea, and we will know with time. So far we see the interest, so we think we're onto something. And there's on our Discord plenty of evidence of that. We don't delete messages. There's people sharing their strategies and people going excited. But I think the good thing is no longer do you have people going perpetual. And the way we see perpetuals is, you have on-chain, and then you have a side table. And this on-chain is like a screen, and then you have like people gambling on the price, right? But it never sees on-chain. It never goes on-chain. It's just like the side table. And now we've taken the side table. We said no need for that anymore. And we're putting it all on-chain. And it makes the books sort of more liquid. It's better for everyone. It's better for the projects. It's better for the ecosystem. It's better for the liquidity providers.
There's the argument that having a more robust, and certainly perp volumes are much, much greater than spot volumes, even for crypto, that perhaps it is siphoning away attention and liquidity and hence APY into things that are not spot, are not settled in the actual assets. Another thing that I want to touch on and discuss is, how do you think about different market structures between, certainly as previously professional traders? I think you guys probably have touched on AMMs, RFQ, limit order books, and maybe some other more exotic market structures. What made you settle on using AMMs as a core base layer of DeFiTuna?
It just feels safer. Actually, our co-founder, it's a funny story. He never was very good at being very successful. The problem here is when you take a trade, you need to be either right or wrong. It's a 50-50, right? And then if you ramp up leverage, then your odds are even worse with fees and everything added on. With CLMM farming, it's a different case altogether. You actually have an edge, at least currently in the market. And that just feels better for everyone, for projects, for retail, healthier for the markets. And we went that direction. We just feel like it's just a better product.
Kind of, because for perps, yes, it's a zero-sum game. For limit order books, like different market structures, I don't think it's a zero-sum game necessarily, especially on spot books. Like certainly most of the players are not delta neutral, but some of them are. And I guess if you're talking about delta neutral players, yes, it could be a zero-sum game. Either you get the spread or you don't get the spread, but I don't know for sure. It feels to me that there should be edge in the crypto market because there's so much retail flow that is, especially on Solana. Like you said, the volumes are really good these days.
Concentrated liquidity market maker is sort of like a bunch of limit orders. Literally what it is. It's a huge amount of limit orders within a range. I wouldn't differentiate it too much. I would just say that from our experience, it's just a safer product. It's just easier to be right with. That's all I can say, because you're in it throughout the whole range. It's not that you're either right or wrong. It's that you're setting this buffer, and timing is also of the essence. And so the longer it goes on, the better it is for you.
Yeah.
And it's just, you don't need to be guessing very well. In fact, you can be setting much wider ranges.
Yeah, I think the room for error is much larger than for professional, like a market making firm that is quoting very precisely on an order book. Moving on to the user front, our listeners are mostly in Asia and a lot of super active community members. How would you recommend them to check out DeFiTuna? What are some exciting things that are coming up that you can share? I guess unknowingly in the last year, we found a lot of alpha for the community because we just like pick super early projects.
So the best way I think going into this is probably just interacting with it. So what you can do is open two times leverage, sort of neutral position. Maybe we'll play around with a little bit of bias, make some money, lose some money, but make sure you learn along the way what you're doing and just decide for yourself. Maybe this is a product for you, maybe not. There is also a section in our Discord where we teach one another. Spend time and educate yourself. That's the best thing you can do. It's very easy to chase that dopamine of let's make that next 100 to 100x. But sometimes it's better to just take it step by step, and CLMM with leverage might just be the perfect tool and product.
A lot of users are used to trying out new things. A couple weeks ago, I was playing around with Exponent and Rate X, and those are like leveraged yield or interest rate swaps. So now I'm moving over to leveraged liquidity provision, which is also new to me.
We're integrating Radium. Come sort of February/March, we'll have full access to Radium pools. So that really gets exciting, right? Not only will we list safe pools, but also we're thinking of making isolated pools where people can launch their meme coins, burn a certain percent of the supply of the tokens, and that supply goes to lending, right? So think of USDC / whatever meme coin you created, you can take against that burned supply. I mean, it's just so interesting as a concept, and we think this is great. Stop loss is coming tomorrow, so people can sleep well at night, right? We're adding stop loss. Actually, if you farm Radium or Orca, it's there's no stop loss, and actually you are very exposed to a direction when you do open a regular CLMM or position. Price falls down, you lose money, and we don't want that. We sort of want to be the place where users don't have to use leverage. They could just also enjoy the interface, enjoy the design, and just enjoy the tooling that we have there. We only charge a one-time fee for every open position, 5 basis points, and that's all we charge. That's our business model. We just want to make the absolute best tooling, and we want to make the absolute best environment for lenders. And somewhere in between there, if people decide that we're a good platform, 5 basis points should be enough. And for a user, it's a really good fee for good service, in our opinion.
And that people can essentially combine multiple actions on one platform, because I'm guessing otherwise you have to put up collateral in the borrow land, and that collateral is sitting there, and borrow the collateral, put it into CLMM.
We don't charge anything from lenders, so lenders, everything goes to them. We're just having a blast watching everyone just enjoy the product.
Your liquidity caps were beyond hit when I checked it out last night. There's no way to deposit at the moment, but hopefully you guys will open it up as the system becomes more robust. And I'm glad to see that you're very cautious with how you're setting the caps as well.
It's a must. We're learning so much throughout the journey. We're so lucky that we implement the strategies. Just for you to know, for the last 10 days, I must have slept like 4 or 5 hours a day. Sometimes if I'm lucky 6. Go in front of the computer, work, at least go work out at least once, then come back. And I can't imagine if it was like even more successful than that initially. If we just went loose on the cap, and also like we've been working 10 months at this for complete silence. Some of our engineers are really tired because they put in sweat and blood, and they're just asking for like 10 days off come January, and so this is just perfect for us. Thank you very much for reaching out. I mean, always nice seeing what other people are doing and just hearing the experience that you have over whatever sort of site that you guys are working on chain. It's just wonderful.
Yeah.
Thank you very much.
在此提醒大家，所有内容均不构成投资建议，都是我跟瑶瑶作为行业知识研究的产出，还有嘉宾的言论也是他们的个人言论，希望大家做自己的研究。
道路千万条，安全第一条，做自己的研究，让我们增强知识，然后在链上开心玩耍。欢迎关注安娜和瑶瑶 Talk， 然后我们会有更多行业一线前沿的资讯跟大家进行分享。非常感谢。